Welcome back. You're tuned into the newsroom, and let's talk about a stock that is in focus on the back of its quarter three results, and that is Gulshan Polyols. Let's pull up the charts. Well, that stock is up and away 4.5% in the trading session on the back of strong set that's coming in. In fact, if you look at the PAT, that's up 5.8x. In fact, the EBITDA is also seeing a sharp upsurge of 218% and on a year-on-year basis, and the margins are also up 920 basis points. Revenue also trading up 2.8% at 627 crores. But let me get on board Aditi Pasari, who's the joint MD of Gulshan Poly. Hi, Aditi. Thank you so much for joining us. Aditi, firstly, I can see very strong set coming in for your company. What have been the levers for growth? There's a jump of almost 5.8x on your profit. Even revenues, the top line has grown 2.8%, and margins also, we'll come to that later. But what have been the levers for growth for you?
Yeah, hi Ankita. Thanks a lot for having us on the show. And we're very excited to actually share the numbers with the viewers. The company has delivered as it had promised in my last interaction with ET now. We had promised margins of 9 to 10% on EBITDA levels, and we have achieved consolidated 9 months EBITDA of 9.5%. The growth has been mainly, it has been driven by the ethanol segment, which has given a standout performance in terms of top line, which is mainly due to the ramp up of capacities from both our plants in Madhya Pradesh and Assam. There has been ramp up of production, ramp up of sales, and the bottom line has also been driven by the ethanol segment, which has mainly come up due to softening of raw materials, which has been a very positive impact on this segment and on the company.
Right. Also, Aditi, talk to us about the margins. In fact, your margins have seen a sharp up move of almost 218%, to 920 bips of margin expansion, and EBITDA is also up 218%. What have been the cost efficiencies driving that, and is this margin sustainable above the 10% mark?
Yes, absolutely. We are looking at sustaining such margins in the coming quarters, this quarter as well as coming quarters, giving out similar numbers in the 9 to 10% EBITDA range quarter on quarter. And the main drivers for these numbers are softening of raw material prices, which has mainly occurred due to the mandate which we have received from the government to procure 40% FCI rice at a fixed price to produce ethanol, which as a result has softened the open market buying price for our balanced raw materials, which are maize and rice. That has led to improve the grain availability in the country and also reduced the prices as well, hence giving us positive results on the bottom line.
Right. Aditi, also you've received financial assistance from MP Industrial Development Corporation Limited worth 21 odd crores. How will this be used?
Yes, this has been factored into the EBITDA levels of this quarter. So the PLI which was received has been factored in.
Right. Also, the company anticipates maximum capacity utilization of its 810 KLPD distillery in FY26. Are you on track for that?
So currently we have orders of about 1,200 crores, which is about 17 crore litre of ethanol production, though we have capacity to produce 26 crore litre. So we have order book of 70%, about 70% of our total capacities, which we are expecting, which will go up in the additional tender cycles of C2, C3, C4 in the coming year, in this year.
Can you also give us your outlook on the grain segment as well?
So grain segment remains challenged. That is mainly due to overcapacity in the country of starch and sorbitol. It is starch which continues to remain under pressure. The starch prices continue to remain under pressure, but that is a very, very small part of revenue contributor in the whole basket of our current portfolio.
All right, Aditi, on that note, we will let you go. And with that, it's a wrap on this edition of the newsroom. Thank you so much for tuning in.